All right, today we are diving deep into a real titan of Indian finance, Cholamandalam. We're going to break down a detailed analyst report to get to the bottom of two key things. First, what's their secret sauce? And second, do the experts think the stock is actually a smart buy right now? Let's get right into it. So let's just start with this one number, 28.5%. What do you think that is? Well, that's Cholamandalam's incredible year-on-year profit growth. A number like that just screams momentum, and it's the perfect place for us to kick off our analysis. Okay, so here's our game plan. We're going to start big picture, look at the whole industry they operate in. Then we'll zoom right in on what makes Cholamandalam tick, their winning formula and their financial performance. After that, we hit the big one. What's the stock actually worth? And we'll wrap it all up with the analyst's final verdict. It's kind of like a funnel, guiding us from the 30,000-foot view right down to the nitty-gritty of the investment case. First up, we need to understand the playground. Cholamandalam is what's called a non-banking financial company, an NBFC. And these guys are absolutely critical to India's economy. They're the ones providing loans and financing in places where the big traditional banks might not. You can think of them as the grease that keeps the economic wheels turning smoothly. The whole NBFC world is really a tale of two sides. On the one hand, you have these amazing growth engines pushing things forward. Credit demand is just through the roof, there's this huge opportunity in rural India, and digital tech is making everything faster and cheaper. But, and it's a big but, there are also some serious challenges. Rising interest rates can really squeeze their profits. The competition is absolutely fierce, and they have to be constantly watching to make sure their loans are being paid back. So, with all that going on, how does Cholamandalam not just survive, but actually thrive? Well, let's zoom in on their specific business model. It's time to figure out what they do so incredibly well. And this chart says it all, really. Look at that. The lion's share, a massive 60% of their business, is in vehicle finance. We're talking trucks, cars, motorcycles, you name it. They are an absolute powerhouse here. But they're not a one-trick pony. They're also making serious inroads in home loans and lending to small businesses. It's a really smart, focused, yet diversified approach. So here's the thing. It's not just what a company does, right? It's about how it defends its turf from competitors. These are what we call Cholamandalam's moats, and they are wide. They have this insane physical network of over 1,400 branches, which gives them reach into almost every corner of the country. That builds incredibly deep relationships, gives them huge scale, and it's all built on a brand people trust, and decades of experience in managing risk. That is so hard for anyone else to copy. All right, let's talk numbers. Now, instead of drowning you in a giant spreadsheet, the web cornucopia analysis pulls out a few key figures that really tell the story of Cholamandalam's rock-solid financial health. Let's look at three of them. First up, 20.8%. This is their return on equity, or ROE. The simple way to think about this is, how good are they at turning $1 from a shareholder into pure profit? And let me tell you, anything over 20% in this business is considered fantastic. So yeah, they are absolutely crushing it here. Next, check out their growth engine, 22.8%. That's the annual growth in their assets under management, or AUM. Basically, this shows you how fast their loan business is growing. It's a super clear sign that the demand for what they offer is strong, and they are grabbing market share left and right. Now this number, this one might just be the most important of all. 2.85%. This is their gross non-performing assets. In the lending game, you want this number to be as low as humanly possible. It means that hardly any of their loans are going bad. A number this low, it just screams discipline and high-quality lending practices. It's seriously impressive. Okay, so we've pretty much established that this is a top-quality, well-run company. But does that automatically make it a great investment? Not necessarily. It all comes down to the price you have to pay. So let's finally dig into the valuation. This table really puts it all into context. If you look here, you can see Cholamandalam's price-to-earnings and price-to-book ratios are higher than the sector average. That's what we mean by a premium price tag. But then, look at the justification. Its return on equity is way better than average, and its bad loans, the gross NPAs, are much lower. The market sees this quality and is willing to pay extra for it. So where could the stock go from here? The analysts ran what's called a discounted cash flow analysis. It's just a fancy way of trying to predict the future. In their main scenario, the base case, they think a fair price is around 1450 rupees. If everything goes perfectly, the bull case, it could even hit 1750. But if the economy hits some bumps, the bear case sees it potentially falling to 1100.
So we've looked at the market, the business itself, crunched the numbers, and checked the price. After all that analysis, what's the final word? Let's bring it all home.
The final score from Web Cornucopia for Cholamandalam is a very, very strong 8.4 out of 10. Now, this score isn't just one thing. It combines everything from financial strength to the quality of the management team. A score this high tells you this is a company that is absolutely firing on all cylinders. And this quote, this just sums up the entire investment idea perfectly. The report calls it a market leader with a significant growth runway. And it's all backed by a management team that knows how to get things done. So, based on all of this, their final recommendation is a buy, with that base case price target of 1,450 rupees. But of course, no investment comes without risk, right? The report is very clear that investors need to keep a close eye on a few things. Stuff like a major economic slowdown, interest rates continuing to climb, competition getting even tougher, or maybe even some unexpected new government rules. And that really brings us to the big final question, the one you have to ask yourself. The picture from this analysis is crystal clear. Cholamandalam is a best-in-class company, but it comes with a premium price tag. So the crucial question is right there on your screen. Does paying up for that kind of quality fit your personal investment strategy? Thanks for joining this explainer.